Bitcoin soaring past 31k as this week turns into an institutional week. A flurry of new ETFs are filed by some of the world's most connected and well-known financial players. What do they know that we don't? We discuss all this and more in today's Collective Shift weekly recap, actionable insights, and a breakdown into the crypto market, all in under 30 minutes just for you. As always, we'll start with the market update with our research analyst, Matt, followed by the financial players and their ETFs. Matt, what does the market look like?
Excellent. As you touched on, big week for Bitcoin. It actually soared up past 31,000, almost hit 31,500, which that was enough to get it past a 12-month high. So yeah, it's been a pretty rough time for crypto overall, but you'd be surprised to know we're actually on track for sort of, out of the 6 months of 2023, we're on track for 5 of those months being green for Bitcoin. It was a really, really nice moment last week seeing it get up that high. It's slightly retraced to about 30,500 at the time recording, but it's enough for Bitcoin to be up a whopping 16% over the past week. ETH, the second largest cryptocurrency, is at about 1,900, and that is up 11% for the week. So again, that similar sort of story we've been talking about consistently, where Bitcoin dominance. So Bitcoin dominance just means what is the value of Bitcoin as a proportion of all of the cryptocurrencies out there, the thousands and thousands of them that are out there. Well, Bitcoin, as of last week, has actually crossed over to over 50%. So one cryptocurrency accounts for, more than 50% now of the total value of all cryptocurrencies out there. So that's a very significant development. You've got that percentage, which is now at 51%. That is now at a 2-year high as well. So very notable development there.
Oh, that's incredible, man. So I guess the question we should be asking ourselves is, what kind of factors really driving Bitcoin's price at the moment and its dominance? Like, do these really suggest like an uptrend that we should be looking out for? Or should we be prepared for more potential volatility? I generally think, as institutional adoption does increase, they do buy Bitcoin. They do buy Bitcoin and Ethereum. They don't go ahead and go to CoinMarketCap and look at the thousands crypto and go and buy those ones. I generally don't think so. They will stick to the heavyweights such as Bitcoin and Ethereum. And of course, in times of economic uncertainty, they do see Bitcoin as digital gold. Just like we do at Collective Shift here, as we always say, a store of value that can act as a hedge against inflation.
I think so, Leon. Like mostly for, again, other cryptocurrencies, there a lot of less volume is being traded. It doesn't take as much, money to move these prices of these, non-Bitcoin, non-Ethereum cryptocurrencies. And I think a big reason for this increase in Bitcoin adoption or dominance lately has been the really, underperformance of altcoins. We've seen those filings that we've talked about recently with all the regulators claiming that these other alternative cryptocurrencies are in fact securities, which that really tanked their prices. And then therefore, I suppose you saw Bitcoin as a proportion of the market really increased. I can't really see that changing anytime soon. Historically, over the decade plus that this market has existed, Bitcoin has always sort of led the whole market into the next sort of bull cycle. And that's sort of what we're seeing here. But I still think it's a bit of time ahead until I suppose we see investors decide to sort of, rotate profits into all these other altcoins, which we typically see. So more volatility ahead for altcoins. Bitcoin, I think, is relatively more safe.
Yeah, well, nicely said, man. And that's the same thought I have as well. And of course, it's a small boat in a giant ocean. Expect volatility. That's what I always say. Now, Matt, I think we should move on into our next big topic of the podcast here. There has been a flurry of ETFs being filed in the US. These guys are really interested in Bitcoin now, right? What's the current news being like? What's the current news look like?
Yeah, we saw last week we focused on one of the biggest news for 2023 so far was the filing of an ETF by BlackRock, world's largest asset manager, the world's largest ETF issuer. They filed for their first ever Bitcoin ETF amid this gloomy period for crypto. And, that's been enough to sort of, be the lead domino, if you will. And we've seen in the past sort of 7 to 10 days, just several, maybe 4 to 5, very prominent, established, asset managers, mostly outside of crypto. They have also now followed up by filing an ETF. In my opinion, a lot of these are just sort of I suppose from a game theory standpoint, like it almost just makes the most sense to just copy paste your last ETF. So in many of these cases, a lot of these, firms like Wisdom Tree, Bitwise, they've previously like attempted, multiple times
They have,
to
yeah.
to file, and then they've been knocked back. So for them, I think a lot of them, to be honest, probably just copy and pasted their previous one, maybe a few adjustments. But I think it's really just from a game theory standpoint, it's like you may as well just put your application back in just in case something is actually going on here. BlackRock maybe knows something that all the others don't know. So I think that's sort of the copycat mentality that we've seen last week. Interestingly enough, I still think that it kind of has driven the rally. I think it's just more the repetition of all these ETFs being approved, being applied for or filed for, have made headlines in non-crypto publications like Wall Street Journal, New York Times. And I think that just repetition has almost driven the price higher, even though, in my opinion, most of these are pretty much just copycats of old ones. So an interesting sort of behavior that we've seen. And it certainly, sparked a lot of conversation in sort of the traditional mainstream media and the traditional sort of business news.
Yeah, awesome, man. And I know we did kind of talk about this last week as well, with BlackRock proposing their ETF. And since then, every other company wants to get in as well. But I guess the question we should be asking is, how could this increased institutional interest in crypto really affect the stability and the potential returns of crypto investments? I just generally think that as respected financial institutions, the big boys, as they come in and enter the crypto space, it adds legitimacy to the entire market. We have been waiting for legitimacy, so crypto isn't associated with scams or Silk Road or drugs or any of this sort of stuff. We need legitimacy in the space, as well as the increased institutional adoption can really expedite the process of establishing a clearer regulatory environment for crypto. While this can lead to really short-term volatility, it gives us clearer regulation, which generally benefits us in the long term. Matt, anything else you would think to answer this question on how could this increased institutional interest in crypto affect stability and returns?
Yeah, I think the largest point there, Leon, is just trust and reputation, especially from, the older demographics have, vast majority of the wealth out there. They trust a lot of these names that are filing for these ETFs, such as BlackRock. And, I think they really use that as a proxy for validation of an asset class. I think also maybe just from a legal standpoint, you can get now entities, if these ETFs are approved, that will now be able to get sort of more direct exposure to Bitcoin, which actually affects sort of the demand supply dynamics of Bitcoin that we talked about last week. And that sort of previously hasn't been the case in some sort of profiles of investors. So yeah, that's by far the biggest takeaway there, is just, more trust, more validation, as you sort of rightly put there, Leon.
We definitely need more trust in crypto so far. So we'll move on to another kind of big news topic that has happened over the last week, and I'll be covering this myself here. So EDX, I'm not sure if the Collective Shift membership, or if you're listening to us, we talked about EDX quite a while ago. So it's a new US crypto exchange backed by institutional giants, right? And I have the article here so I can bring it up for you guys to see. Give me 1 second, and there we go. So EDX was actually announced last September. We discussed it really significantly with Collective Shift members at that time. Basically, they are an institutional-only exchange. So Matt, myself, you probably listening to this, we don't have access to this, unfortunately. This is only for the big boys. It's backed by some of the biggest names in traditional finance: Fidelity, Charles Schwab, and Citadel. These guys are well-known players in the financial institution system. So basically, what they're going to be listing so far on EDX is only 4 cryptocurrencies. And now this is significant, so I think we should actually discuss the 4 cryptos in general. First off is Bitcoin and Ethereum. These are 2 well-known cryptocurrencies. Of course, they would be included in their listings. Now, the second 2, I would say, are actually quite questionable at the moment: Litecoin and Bitcoin Cash. Litecoin, of course, does have a foothold in institutions. They're really aware of it. But Bitcoin Cash, I'm not so happy for them to be covering Bitcoin Cash in this giant institutional investment-only vehicle. Now, what they want to do, they want to do something really separate, really different here. They really want to separate the trading and the custody accounts on these exchanges. Now, this has been drawn scrutiny from FTX as well as Binance, where they've been accused of doing this, yet to be proven in court. where what happened was that the exchanges would be putting your custody and your trading accounts in the same basket, so you don't really know which one's which. But they really want to add more professionalism in the space by separating these two trading accounts and custody accounts, which is really a good thing, right? It just adds to the security and the complexity as well as professionalism in the space. Now, Matt, I want to pose a question to us here. Now, this is a conservative approach. They're only listing 4 tokens: Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. How do these just listing of this conservative approach of these 4 tokens, how could this really impact the market and the value of these 4 cryptocurrencies listed on the platform? What do you think about that?
I think in terms of market sort of perspective, I think again, like more another repetition of this like high end sort of exchange, institutional only, again being conservative. I think it really again like re-emphasizes or might teach or highlight to market participants just how much more risk the alternative cryptocurrencies carry, which I think for a lot of people I talk to, new members, just people in the public, they always tend to go into the altcoins first. It's a very common sort of mistake that happens time and time again. And it's just sort of, the risk, the uncertainty from a regulatory standpoint of what will happen to these altcoins. At times, I don't think the market really prices that accordingly. And I think this is probably another example of the ones that are probably have more surety or certainty regarding their status and their that they've got the tick of approval, so to speak. I think that again will put more capital into those 4, namely Bitcoin and Ether. And again, you might see that the dominance of those 2 really just really consolidate,
Skyrocket.
and they'll skyrocket, and then just be, I guess, more of just a real certainty in terms of just the future outlook of them. That's at least how I'm sort of seeing the significance of this conservative listing of these 4.
Yeah, that's right. And I don't want to double down on that and say that EDX could really bring more institutional investors into the crypto market space. And this is conservative approach that other exchanges might be following. And if if they get into a proven track record, other exchanges will say, okay, then we're a little bit safer in listing Bitcoin, listing Ethereum, listing Litecoin, and unfortunately also listing Bitcoin Cash. So we'll just have to leave it at that, ladies and gentlemen. If we do see this exchange starting to become very popular, don't worry, we will be covering it for you so you're on top of it. Now, Matt, we want to pivot as well to some project news worth paying attention to. I know we have had quite a bit of project news coming out this week. What do you have to share with our listeners out there?
Yeah, for sure. Just as we had sort of institutions, adoption as sort of the theme in terms of industry news and market sensitive sort of news last week. In terms of project news, like the overwhelming theme was just layer 2 or, solutions that are building with layer 2 technology. Quick definition for all our new listeners out there. Layer 2, it's basically just, scaling solutions that are built to sort of alleviate the pressure that is on what are known as layer 1 blockchains, such as Bitcoin and Ethereum. They historically have struggled with when a lot of people are using them at once. The fees can get to really unsustainable levels. They become expensive to use. So therefore, we've got these layer 2 solutions that are trying to essentially just, hey, I will get a bunch of activity on my network being a layer 2, and then I'll periodically just batch them all up and post them to the layer 1, taking a lot of stress off the layer 1. We got a lot more resources on them at Collective Shift, but that's sort of the high level. So 2023, they've been like arguably the story of 2023 has just been more building and more, launches on top of layer 2 solutions. So last week, even we had, a few sort of announcements and developments. So Zora, which has, been out for, a few years now.
Yeah.
So that's Zora. So they're trying to become, the go-to place just for creatives, artists to like interact with NFTs and, launch them and manage them. They built their own sort of Zora network, which is, using technology that a layer 2 solution provides. So they're building with something called the OP stack. Binance is also working with something called the OP stack. And last week, they announced that they're going to be building a layer 2 solution. So again, what's sort of the value proposition? Like, what's the point of any of this? It sort of just comes back to cheaper fees, really. Like, there are other reasons, but ultimately it always just comes back to making it easier for people just like you and me to just use the network for it's not costing us an arm and a leg to just, transact and just do things on the network. finally here we've got Coinbase. So they are also, notably sort of the biggest name that is working with this technology. They are getting close to launching what they're calling Base, which is another sort of layer 2 network. I actually went to a local meetup at Upside DAO in Cremorne in Melbourne last week. So Coinbase held like a meetup. There was about 70 people there for the Base, like for all things Base. So they sort of presented on it, explained what it is, why it matters, and they actually said that it should be live within the next couple of months, which I hadn't yet heard a deadline on that. So that was the first time I heard that. So again, takeaway from 2023 is that these things now actually they've been building for a while and they're all starting to come out, which is very exciting for people who love all the altcoin space.
Yeah, it's super exciting, and I'm excited for Base as well to launch. They did have a Sydney meetup as well, but I unfortunately missed it, so I'm gonna have to rely on you to keep us updated on Base and what's happening there. And of course, we will cover it at Collective Shift. But I've got a question for all of you listeners out there. I mean, and Matt, for yourself and I as well, should people really be considering investing in NFTs and any of the other assets related to these layer 2 platforms? Or really is it too early to gauge, to accurately gauge their potential for returns? I generally think investing in NFTs just remain really high risk. They're a high risk maneuver. I think of it as a leveraged play on the base chain itself. So your NFT will likely only do well if this layer 2 also takes off. There's an influx of users and they all want to come and just commingle in the entire base chain. It is generally a good way to diversify your portfolio, but you have to be sure, not financial advice, of course, you have to be sure that it is a proper allocation in diversification in your portfolio. Like, is the NFT worth 50% of your portfolio? Then probably not a good idea. Of course, that's up to you. We aren't financial advisors for you. But Matt, what do you think about this, about NFTs and layer 2s?
Yeah, that was a good breakdown. Like, let's just say Zora in this example. Like, yeah, okay, sure, they won't be the go-to place for NFTs. They've been on layer 1 for a while. Now they're launching a layer 2. Does that mean that NFTs all of a sudden are like, a really much more promising sort of investment prospect? Yeah, I would say, yeah, absolutely not. I think definitely sort of short term, I don't think it really changes much from the investment landscape. What I'm personally looking out for is just, will that increase the amount of sort of usage and types of things that you can do with NFTs? If I see proof of that, I will zoom in even more to focus on it. But for now, I'm just watching from the sidelines because I don't really think it's going to be affecting demand for NFTs super imminently. But some really good points there, Leon. Even the layer 2s, right? Like, cool. We've seen a lot of adoption building on layer 2s. Does that mean that the layer 2 tokens like are therefore like a really promising investment, for example? Again, like personally, I'm similar approach to NFTs. Just then, I'm very closely tracking activity on them, usage of these layer 2 networks. If it's consistently growing, like notably without different incentives, because that can sometimes, manipulate sort of the data, that's when I will, zoom in closer and actually consider investing in some of these layer 2 tokens. Like, if you just want exposure to the entire sort of layer 2 space and you think, okay, it's all going great, but I don't have time to actually focus on any given layer 2, well, then you have to think, okay, where are all of these layer 2s putting their data back to? In this case, it's Ethereum.
Yep.
So you could make an argument that would then bolster the value proposition and investment case for ETH. So different ways you can play it. But yeah, again, really just want to emphasize the story of 2023 so far has been layer 2s.
Yep. And Ethereum scaling solutions. Definitely. Right. Awesome, man. Good feedback there. Now, Matt, let's move on to our last section here, which is a rapid fire, or anything that happened in the market over the last week that is appreciative or not appreciated anyway. So Matt, what do you have for us, mate? What's happened this week for you?
Yeah, one that I really didn't see much discussion about. Everyone was excited about price, the ETF filings, the launch of EDX, things like that. One that I saw was SAP. So they're probably one of the biggest, businesses in the world that you haven't heard of because they're purely B2B. They're just about every large company in the world uses their B2B infrastructure, just for all things internal systems, things like that. They're out of Germany and they are starting to use USDC. So that's like one of the largest stable coins in the whole crypto space. And they announced last week that they are using USDC to test cross-border payments. And they have integrated with Circle, which is one of the managers of sort of USDC. So this announcement, importantly here, SAP, a representative said that, a quote here is that the hassle for many small and mid-sized enterprises of sending money overseas can be solved with digital money and blockchain technology. So again, recognizing, as we talked about, many times, we try to sort of, promote and prop up the value proposition of blockchain. This is yet another sort of established company that's going like, hey, cross-border remittances is just, the average punter, the average person just gets robbed essentially of trying to send money to their families, their friends overseas. We can do this better with blockchain technology. We're going to test it here with USDC. And I think if this space is going to be around in 10, 20, 30 years, we need things like this to, be coming out and companies testing with it rather than it being more speculative, which is what it is at the moment.
Yeah, definitely. We need that kind of fundamental building so that we can survive the next 10 years and then thrive later on down the road. Well, that's awesome, man. That's good. Thanks for updating the Collective Shift membership there. I'll go ahead with mine as well. I did find a new resource and a new website. I think it's actually pretty cool, so I wanted to share it with you guys. So this one is called The Value Prop. It's a new website. I think the guys behind Polygon Labs, or actually proposed it or have implemented it, right? So it's called The Value Prop. It's on the screen now, and I'll leave the links in the description for you. But basically, it kind of features the numerous use cases that crypto may have across many, many verticals, including sustainability, humanitarian work, education, and a whole bunch more. So as you can see here, this is a pretty nice looking website as well, but you can go ahead and look at all the different, the scope that it does look at, applications on networks anywhere in the world. So I'm going to leave the link in the description. I think it's pretty cool. You can look up a whole bunch of different stuff. I just think it's really cool, Matt. So I just wanted to share that with the Collective Shift membership. So make sure you take a look in the description.
I love that, Leon. Yeah, I think I was listening to one of the lawyers, I think from Polygon, who put this together and led the charge here. And, she said that they're going to be updating this, like they're going to keep iterating on it because all the feedback they've gotten has just been, immense. And they've been really, pleased with what they've seen. Policymakers, regulators is going to be brilliant for them. And even just the general public, just, there's the Australian Australian
that's
Open
right.
Artball there.
Yeah. We had a small partnership with the Australian AO,
no, fantastic. But yeah, just generally, people from the public eventually being able to point them to this website, which just, for now, it does a great job of highlighting different projects and examples, hundreds of projects that are using blockchain to, improve upon either an existing process or in fact bring a whole new process that doesn't exist without blockchain technology. I can see this website, even developing a bit more where they maybe dive deep into, emergency aid, for example, or GPS mapping, and they might do a whole sort of, either test case or, those reviews where case studies, I think
that's right.
I think they talked about doing case studies to, give just, the average person just a bit more understanding about, cool, there's all these words, buzzwords and all that, but how did blockchain technology actually help you achieve what you wanted to do? So I'm really, really love how his use case database has come out. And yeah, we'll definitely drop it in the links below, as you said, Leon.
Definitely. And it's been actually pretty interesting to go through and look at all these kind of use cases or test cases of different products that have been launched in crypto. And you don't realize it. You look day to day or weekly as we do, and you just miss things that happen sometimes across the world, and they are doing pretty well with their, initiative. And I'm just in the education use case here, and you've got block search wallets, layer 3, nukes, dream DAO, rabbit hole, and even Questbook. Some of these I've used myself, and so I should go and research some of these other ones. I just think it's pretty cool. But yeah, that leaves us to the end of this podcast, my friends. And if you're listening out there as well, make sure you leave a like and subscribe for us. That is a wrap for this week. If you're looking for more insights, make sure you see our revamped weekly Collective Shift newsletter, providing free weekly insights every Friday. Subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter. We'll see you there.
See you, folks.